Good morning, Checkmate crew. It is opening bell of the New York Stock Exchange at 9:30 a.m. on this Thursday, September 22nd, 2022. Yours truly, Mickey Blindside, here with your market memo. If you're joining us from Twitch, YouTube, or Facebook, check out the video description. We have links to all of our sites and our Discord channel where we talk trade around the clock and where I send out my live alerts and exclusive market commentary. It's all free and there are no paywalls. We actually make money trading around here, unlike other groups. So what do you have to lose? Go ahead and click on that Discord invite link and come join us. We're all about education and building a thriving community of traders where we can bounce ideas off of each other, and it's of the people, by the people, for the people, and we shall not perish from the earth. Okay, so let's get right down to business. Today is the day after FOMC. So yesterday, Powell puts on his makeup, gets on stage, does his thing, raises by 75 basis points. We already knew this, right? We've been tracking this the whole time. The bond market got what they expected. We saw a little bit of a sell-off as Powell was speaking. So I think I guess if you think that the sell-off yesterday was because of the Fed, you'll probably be noticing, all the hawkishness that the Fed that Jerome Powell spoke. He's talked about that unemployment will go up, and he's okay with that. That this is a long battle with inflation. This will last a while, and they're probably going to keep elevated interest rates for at least a year or so. And I think he actually mentioned 4.6% as the target that he was looking for. So around, that's close to 5. And again, back in April, May, that's when we talked about, Bill Dudley saying that 5 was eventually the area that we're going to get to in the Fed funds rate. So there we go. All this theatrics in the last 4 months just to, come back to what was said, 3 or 4 months ago. So, it's I think, to me, this is a non-news event. We knew this was going to happen. And then, of course, you get on Twitter and people are like, well, the dot plot this, a dot plot that. Honestly, if you really want to track the dot plot, just track the 2-year treasury. Okay, the 2-year treasury yield and the dot plot pretty much coincide with one another. So it kind of begs the question: why even have a Fed? Why don't we just set policy based on a 2-year treasury bond? I mean, that's a good question. But all their projections and everything, they've been wrong. They were wrong about this inflation being transitory. So now, they're using data. They're using, CPI and PCE, which is their favored inflation reading, which are all very lagging indicators. All right. You and I here at Checkmate Trading, we like to look for forward indicators. And it's TIP, TLT. We've been looking at this, okay? So I got a few questions about this yesterday as well. TIP is the inflation-protected treasuries. TLT is long maturity bonds. These are ETFs, okay? And the reason why I like to use this is because this is a tradable. This is tradable, all right? There are institutions that actually place this trade, the long short. This pair, okay? So yesterday afterwards, we sold off. We actually it broke down below our kind of no man's land, all right? It took a little bit longer. Remember how I said that if we see these outside day downs, we generally see this TIP-TLT ratio going down. We saw the same thing here. We saw the same thing, except this one took a little bit longer. It wasn't like 7 or 8 sessions like usual. It took a little bit longer, but it seems as if this is a thing. It works, all right? It is gapping up this morning, so we'll see what happens. I still think that we're probably going to just stay in this range until next year. Probably just up and down, up and down, up and down. At the same time, our liquidity data, it's just If you look at the New York high-low line, it just keeps going down. I wouldn't be surprised if for the rest of the year, this just keeps going down, and we just have these, these sell-offs, and then these, wicked bear market rallies, and then we sell off again, and we just kind of bounce around at these levels. I wouldn't be surprised if that's what happens, and then all the while, this line just keeps going down. So no sustained rallies. It's just these big, 1-2 days, or maybe, a couple of weeks, and then we're back to selling. All right. So I wouldn't be surprised if that's what happens just for the rest of the year. Okay, we'll take it one day at a time. Of course, I'm not trying to predict the future, just anticipating what could be. All right. New York AD line, advanced decline line, it's going down. Breadth is going down. But surprisingly, our AD line in junk bonds is not so bad. It was actually kind of flat. It's minus 22. I mean, look at these advances and declines. They're in the 300s, 400s. If you take their absolute values, 22 is nothing. All right, so it's pretty much flat. So even on a bad day like yesterday, where the market sells off at the end of the day, junk bonds didn't really have a collapse. So interesting. Let's see what happens today. Actually, where is HYG opening? HYG opening down. Okay, we'll see. We'll see at the end of the day. This market tends to surprise at the end of the day. So let's see. Let's see what happens. All right. I still think the biggest indicator is this ZF. All right. Dash for cash. Look at this. As this keeps going down, I just can't see risk assets having a sustained bid while holding cash and taking advantage of short-term yields is an alternative. It is a viable alternative now. All right. If we look at the 2-year yield, right now you can get a 2-year treasury bond, a 2-year treasury note, and get 4.1% per year, which is more than double the dividend yield on the S&P 500. All right. So you get more than double the yield of the S&P 500. You don't take any principal risk, because if you buy a 2-year treasury and hold it to maturity, your principal secure. Back last year, that yield was 0.2, 0.1%. So that was not a viable alternative. Now it is at 4% per year for 2 years. That is definitely an alternative. All right. And if this keeps going up, and if the 5-year, this keeps going down, so bond prices and yields are inversely related. When bond prices go down, the yield is actually going up. So as long as yields keep going up and the price of those bonds keep going down, that alternative is just, there's demand for it. And that demand takes away from demand from risk assets. Okay. So in order for us to see a sustained rally, this needs to go up. Now, we talked about this going up. If this goes up, there's going to be a domino effect. Okay, dollar's going to sell off because that's a very crowded trade. And also, Japanese yen will probably rally. Speaking of the Japanese yen, oh my gosh. I mean, is this the disappointment of the year, or is this the disappointment of the year? Like, this is a trade that I've been waiting for such a long time, for like most of the year. All right, I was waiting for this. I mean, I was talking about this in May and June. God. And this is the late levels back from 1998. I didn't make up those levels, by the way. These levels are from 1998. And I was like, oh man, if we get there, that is the mother of all shorts. And we got there, and guess what? I missed it. By ticks. All right. 6915 was a low. My order was at 6901. All right. Yes, I had an alert at 6921. I thought about getting in, but I didn't. I was waiting for that 6901. I never got it. So it is what it is. I am canceling that order now, because if JPY, if it just keeps going up because ZF is going down and the short-term yields here in the United States are going up, then is it possible that the Japanese yen breaks above those 1998 levels? you have to think. Let's zoom out even further. Let's zoom out back to the 70s. I mean, definitely it's possible. If you look at the monthly chart, it could. It's highly unlikely. But this is uncharted territory here, but it's definitely possible. So I would be very hesitant to re-enter if we get to those zones very quickly, all right? So the reason why we saw this sell-off is because the Bank of Japan, while we were asleep here in the United States, the Bank of Japan intervened in their currency. And the last time they intervened in their currency was, guess when? 1998. Go figure, right? This, at the same exact levels they intervened back in 98. They did the same thing at the same levels 25 years later. Imagine that. All right. So they intervened. They actually sold dollars and bought yen to intervene in their currency, just, running away from them. Okay. And so that's why we saw that dollar drop overnight. And it's all from Bank of Japan intervention. All right. So Bank of Japan is known to be like that. They throw curveballs like that, and they don't really broadcast ahead of time what they're going to do. All right, so it makes it kind of tricky. All right, it makes this kind of tricky. I mean, it is what it is. I mean, that's trading, that's life. If you want to manage risk, it is what it is. It does kind of suck though, because this is a huge move. I mean, it just margin wise, it's like 350 points on the S&P 500. It's like catching a 350 point move. Imagine catching a 350 point move on the ES contract. That's a ridiculous amount of money, right? This was the same thing. It was on the same scale as that. So, oh well. On to the next trade, I guess. So that's Japanese yen. Oh wow, it's well, at least the dollar is recovering. Now let's say, I don't know, by some miracle, ZF recovers and actually ends green, which I don't see it happening, but if it does, let's say it does, then I would suspect that the US JPY chart, or if you're just using the Japanese yen futures, we'll see some big moves. If ZF goes up and the dollar comes down, USD JPY, this will break down. Okay, this breaking down means yen is appreciating, okay? So this will break down. And I think if this breaks down, gold will rally, okay? Gold will rally hard if that happens, okay? And if that happens, I also think Boeing. We talked about this actually in the beginning of the week. We talked about it on Tuesday, domino effect. It could be part of the domino effect. Boeing is very dollar sensitive. I think it could trigger a chain reaction. But again, it all depends on ZF, okay? If you're going to, again, I've been saying this all week, if you're only going to look at one chart this week, it's going to be this chart, okay? Because this is a good proxy for short-term yields, all right? And it's a tradable futures, so you get that price discovery. This is a chart to watch, okay? You can go on TradingView, ZF1 apostrophe. You can use that, okay? So as far as, and again, I think right now, going back to the Fed, just circling back here, I do think that either next month or November, we're probably going to see a deflationary report, okay? How do I know this? Because I studied the 70s. I always keep mentioning the 70s. And in the 70s, that's what happened too. There were deflationary reports. And then the Fed would have to pivot. They were, pretty much forced to pivot. And then inflation would come back in about a year or two later. All right. So that's why I suspect it's going to happen here as well too. I think this what happened yesterday at the end of the day when TIP TLT sold off like this, I think pretty much it's, the bond market telling the Fed that they don't believe them. Okay. So we shall see that. And now until the next CPI report, that's October 13th. There's a lot of time. I mean, we got 3-4 weeks left. All right. Anything can happen in those 3 or 4 weeks. Anything. All right. This could keep selling off. And I think if this keeps selling off, we're probably going to retest the lows. in the equity markets. We'll probably see 3,600 again. Okay. And again, just from options positioning, 3,800 zone, 38 to 38.50 was where we saw a lot of puts bought. Okay. A lot of puts were bought around there. Okay. It doesn't look like they're cashing out. I mean, if they do cash out and the VIX comes down, we could see a little bit of a relief rally. All right. But if we lose that 3,800 zone, if we lose this week and we start testing 3,600, that is where a lot of puts got sold. There's a lot of negative gamma there. Negative gamma. And that is a situation, again, negative gamma. Weakness begets weakness. All right, we've had this before. I believe around September, August, we had this before. So it's same market conditions. We're weakness will beget more weakness if we lose 3,600 where all those puts were sold. That is where we could potentially see that wick down into that 15.5 times forward earnings zone, that 34.40 zone, because this is also where a lot of puts were bought. So this is an area where there's a possibility where puts can be cashed out. And again, market maker just dynamics. If market participants are cashing out their puts, they're selling their puts, market maker has to buy those puts, which are bearish positions. They will have to go long on the market to even out their books. All right. So there's that. The weakness begets weakness area where puts were sold. Okay. If a lot of the put sellers, they run to cover their gamma risk and they're buying puts, market maker has to sell those puts, which is a bullish position. So they have to short the market in order to even out their books. That's why weakness can beget more weakness around negative gamma zones. All right. And that negative gamma zone comes up around 3,600 to 3,650 zone right here. So we're approaching it. Okay. Do we approach it and do we panic? A very good possibility. That's when we have. That's where I anticipate we'll see a wick down. We'll get that 3,400 right here. We might not get it though. So I'm going to nibble a little bit for long-term shares on SPY at this zone 3,600, 3,650 zone. But most of it I'm going to be waiting here 34 to 34.50. So that part hasn't changed. All right. I will short the market if we rally and we get to around this 4,100, 4,125 zone. All right, 4,100, 4,125 zone, that's where I short. It doesn't look like we're going to get there, but if we do, that is where I'm going to buy puts, and I'm going to buy puts on triple Q. All right. 3-to-1 reward to risk, just like last time. You guys know the drill by now, okay? I'm going to be buying for 2 or 3 months out. 3-to-1 reward to risk or better, and then we'll just wait. We'll just wait for the sell-off. Okay, our liquidity data is showing weakness. All right, not as much weakness in the junk bonds part though, but by our high-low line and everything, and our advanced decline line on the New York Stock Exchange, it looks like liquidity is leaving the market. All right, it is weakening. Okay, it is weakening. All right. As far as our other plans, Ford, today is day 3. Today's day 3. Usually in the afternoon is when the brokers will start forcing margin calls on their clients. So let's see what happens at the end of day. Okay, let's see what happens at the end of day. If it drops a little bit more, I might enter some shares. Okay. I might enter some shares. We'll see. We'll see what happens. Okay. What I would like to see, what's ideal is if we see it drop and then it starts recovering quickly. That is ideal. That would mean that the margin calls are getting processed and at the same time there's institutional demand to get in. That would be an ideal signal. So something like at the end of the day, like a big wick down and then it recovers. That would be an ideal signal on Ford for day 3 margin call day. If we see that signal, I'll buy. Definitely, I'll buy. Okay. If I don't see that signal, if it just keeps selling off and there's no buying and it ends at the lows of the day, then no, I will not buy then. Okay. So a little bit of a change in that plan. Okay. Other things, no changes. HUT still been waiting for 165 to buy. If it gets to 2.5, I sell covered calls. All right. UUUU, uranium. Oh, uranium coming down, almost hitting our zone 610. So if it goes under 6, I'm buying some more shares. Okay, I'm buying some more shares once it gets under 6. So high fives, I'm willing to double up on my shares there. Let's actually take a look. I want to do some looking here. Let's look at the weekly chart. I like the weekly levels for Bollinger Bands. Oh, look at that. This zone right here, the lower one standard deviation is at 5.5. Okay. So maybe that's where I buy 5.5. And that's probably a good zone for me to cash out of my protective puts that I have. So those protective puts, I have those, I still have those October 6s that were paid for by the covered calls that I sold. They're up 50% since where I bought them. All right. Oh, there's my trigger for 610. That's not a buy order. That was just an alert. So I can monitor it if it gets under 6. But yeah, here at the weekly zone, 5.5, that's where I'll cash out of my puts and buy some shares with the proceeds right here. I'll double up on my share count. All right. And then I suspect if we pop again and we get to this zone, like maybe around $10 zone, $9-10 zone, that would be ideal for me to sell covered calls. And I'll probably sell covered calls for like 11 or 12, maybe a month or two out. And then we'll see. A lot of that is going to depend on our liquidity data. If our liquidity data starts turning up where it starts looking like we may be, that we may have a sustained rally, then no, I'm going to wait to sell those covered calls. But if liquidity data remains weak, then no. I mean, I'm going to be very aggressive in selling those covered calls. All right. And I'll be very aggressive in buying puts on the triple Q and the US indices, if that's the case. All right. It's all dependent on that data. So monitor that data. We look at that all the time. That's another reason why you should join the Discord so that you get access to that junk bonds ADL line. I'm pretty sure there's not a lot of people outside of major institutions that keep track of that ADL because it is very tedious to do. So, but I do it all for you, and I show you guys everything. So why not, right? Let's take a look at cryptos now, okay? It's cryptos. Just short-term gambling. I'm not seeing any big block trades. It looks like the institutions, they got their merge. They made their money and they cashed out. Good for them. And now retail is trying to scramble for breadcrumbs. It looks like a lot of the volume is actually in shorter dated puts. Let me just verify. And today we're not just going to look at ETH. Oh, by the way, there's another trade that went through. So last night while I was asleep, we got our buy level on Ethereum, by the way. So that's another position that we have now. This is the reason why I use limit orders for all of my buys. Is because sometimes, in these markets, especially like crypto, it's a 24/7 market. So sometimes you get your levels and you might not even be awake. But our first level, this 1241.46, we talked about that since like here. No, even I think around here. Yeah, we talked about that since July and August. And we talked about it a little bit more for the past couple of weeks. So that is a level we've been looking at for a month or two now. 5 weeks, actually. 5 weeks we've been looking at that level, and finally we got it. So, hey, patience pays, all right? So we got in. We're a little bit up right now. We're up like 3 or 4%. Let's see what happens. My main buy is still where ETH and gold, the ETH gold ratio is at 0.55. That's where my big buying will happen, right here. I may not get it, but I want to remain patient to manage risk. You never know. You never know. Okay, so I did nibble though at 1241.46. So I just wanted to let you guys know that. All right. I did not use CME futures. I just bought physical on a digital wallet. Okay. Back to the options market in Ethereum. Let's see what insights we can get. So yeah, pretty much. Oh, look at that. Some Octobers are coming up. October calls. October calls. Interesting. Let's see what we can deduce from the October calls. Call chasing. But it doesn't look like they were block trades, were they? It doesn't look like they were. So it's just retail chasing after it, most likely. Let's see here. October volume. There we go. They switched it around. They switched these buttons around recently. I'm so used to seeing them spaced out a little bit more. Anyway, so yeah, that was around what? Right here, 1800. Mostly, I mean, they're way out the money. So at 1800, those are at 19,800. So, you know, so pretty much that means that if we see a rally and it starts getting into the 1900 zone, we can expect to see a little bit of profit taking. Okay, it's like, you know, Wall Street bet style, right? Wall Street bets, you know, those guys, they take a meme stock, they buy like way out the money, you know, a $6 stock, they buy $10 calls, and then once it starts approaching 9-10, they start selling off, and then it just collapses, right? It's like Bed Bath and Beyond or whatever that company, BBBY. It's always like that, right? So retail chasing 18-19, way out the money. If it starts pushing there, then, you know, you can expect them to all try to leave the exit all at the same time, and so you can probably expect a counter reaction, a very strong counter reaction if we get there. So that might be a trade. That might be a trade. Actually, that is probably where I'll take profits. If our liquidity data remains weak, that initial buy that I did at the 1241 or so, I will exit probably around 1800. I'll probably do a little bit less price, 1750 to 1800. I'll take my profits. That's a good amount of profit. That's almost 50%. I'm okay with that. I'm definitely for a couple of weeks. That's great. And again, I've told you guys this before. I've done the math for you. If you have $1,000 and you save $100 a week, if you compound your money at 2% a week, you'll be a millionaire in 5 years. All right. I'll do the math for you guys. I've done it before, so I've shown you guys this before. So check out the previous videos. You'll see all that. Okay. So yeah. So anyway, I'll take profits here as long as our liquidity data remains weak. All right. Anything else you guys want to look at? I see people typing. Oil. Okay. Oil. Yeah. Ari's favorite. Oil. Oh, wow. Interesting. Look at that. Oil, I think right now they're on the November contract. Yeah, the front month is in November. You know, I still want to wait. I want to be patient. And again, I might not get it, but that 75 to 77 zone, that's where I want to buy. And remember, like a couple of weeks ago or a week ago, when that White House staffer, you know, made a mistake and announced that that's where they're going to buy for the strategic reserve. So we may see the market not, you know, if it goes down, the market may try to front run that. So we might not get it. It's probably very low chance it gets to that 75, 77 zone, but that's where I would want to long. And then I would want to go short at the top of the structure right here, 120 to 125. If you're going to be, you know, I'm going to try to do a little bit longer dated puts, probably for like December. So I'm going to be using the December contract levels. And in the December contract, the edge of price structure is like 105, 110. All right. There's severe backwardation. So that's why the front months are way higher. But I think if it gets to this level, and it also corresponds to the 2 standard deviation Bollinger Band on the weekly chart too, that level. So I'm pretty happy with shorting right here. That's going to be the bigger trade. I'll long a little bit if it gets to our level, but I will short with size if it gets to these levels, the edge of our price structure on the December contract. All right. What else? AMD. AMD is one of those stocks that I was long on. Remember last year I was long on those leaps. We made a good amount of money. Of course, if I held it longer, I would have made more. But it was a trade that we made 100+% on that last year. Here's the thing. Okay, here's the thing. If TNX, let me get back to our chart that doesn't have all these Bollinger Bands, because putting Bollinger Bands around TNX is utterly ridiculous. If TNX keeps going up like this, okay, if the 10-year treasury keeps rallying like this, no tech stock is safe. All right, no tech stock. I don't care how good it is. AMD's a great company. All right. Are they facing certain headwinds right now? Yes, but if you're a long-term shareholder, I think this is a great stock to own in the long term. It's a wonderfully managed company. All right. But right now, the macro environment makes it very hard to even own a great company like AMD, especially in a semi space, with the TNX going up and with AMD being priced for growth. All of this is growth premium. So if the 10-year yield just keeps going up, then we're going to see multiples shrink. It is what it is. All right. It's a great company though, but again, TNX. This is very semis, growth companies like this, very sensitive to TNX. All right. That's a 10-year treasury yield. So, imagine that. Today, TNX just makes a huge candle up, and AMD makes a huge candle down. All right. Enough said. 1129. Yeah, that's right at the peak. That is the peak. That is right when we sounded the alarms for inflation. Some of us admins, we were talking about inflation stuff back in November. Too bad we didn't short bonds then. Let's see. Is that the bottom? Yeah, look at that. That's right as we get into the uptrend in TNX. So right as we continue that huge monster rally in TNX, that is where AMD starts falling. Okay? So those are my thoughts. So I don't know how you guys want to play this. Would I want to short this? No, it's a great company. So, when things turn around, this is going to go back up. So I wouldn't want to be short this. There's other stocks to short if you want to go short something. There's other things to short at higher levels. And again, we're shorting QQQ when S&P 500 gets to that 4100, 4125 zone. I think that's a better one. But this stock, I would once we get the Moab, this would be a great candidate to buy. Once we get that mother of all by the dip signals, which we haven't yet, okay? And we may not even get that, so who knows, all right? We'll take it day by day. Oh, you got puts on it? Okay, very good. Very good. It's again, TNX going up like that, this is going to keep going down. It's just I wouldn't buy puts here. Maybe if you bought puts earlier, yeah, sure. Write it down if you think TNX is going to keep going up, which it looks like it is. That looks like it's has momentum on its side. We'll see. Any other questions, comments, rude remarks? All right, well, that wraps up our session of the Morning Market Memo. Again, Links are in the description. Come join our Discord. Be a part of our growing community. There's no sub fees. There's no paywalls. Again, of the people, by the people, for the people. So if you enjoyed our video, hit like, follow, subscribe, comment, show us some love. We'll be back at it again next week. Tomorrow, if I have some time, I'll try to do another session. I'll try to announce it if I can. And I'll hang around in the Discord for a bit. All right, guys. Have a great day.